interest, right? Factory cost 400,000, and he has 500,000 in his own pocket, in his own bank, earning 3%, which is $15,000, right? If he opened the factory, scenario 1, how much wealth he have now? 100,000, and instead of earning 15,000, he is now earning 3,000. So how much he has lost? How much he has lost?
12,000.
So that is the implicit cost. Foregone opportunity, lost income, the other names of implicit cost. Understand?
So it is the percentage of the, is the 3% of the amount that he doesn't have anymore.
Yes, because he opened the factory. See, if Joe purchases the factory, so that is
Yes.
not that. So, what is the characteristics of implicit cost? That it doesn't have any physical form, right? You can express in dollars, but it is not the actual payment, right? And the nature of explicit cost is it has physical appearance, it's got physicality, right? Scenario 2. What if Joe purchased the factory using 200,000 of his own money and 200,000 borrowed from the bank at 6% interest? Now you see the flavor of difficulty in this question. Factory cost 400,000, and he says, okay, I'm gonna be putting my own money 200,000, and from the bank 200,000, but 6% interest I will pay. How much 6%? Right, 12,000. Right, 12,000. Right? So you tell me how much he owns. He owns his own money is 500,000, on which he was earning 3% interest, earning 15,000. Now he set aside from his 500,000, 200,000 he invested in his own factory. So by investing in his own factory, he is earning any interest? No. He lost interest. So how much interest he lost? What is the implicit cost? Implicit cost is lost interest, which is 200,000 multiplied by 3%. Answer is 6,000. So this is his explicit cost because he's actually paying for $200,000 loan from the bank, and implicit cost the lost income, which is 6,000. So what is total opportunity cost? Implicit plus explicit. What is the answer here? D. Understand, everyone? Gustavo, TD,
Yes.
Mirko?
Yes.
Yeah.
Good. Now, this question. So this question I am giving you as breakout room class participation activity. I am setting up a breakout room, and after that we will be talking about its answers. So let me pause the recording here and setting up the breakout room. You are okay. Welcome back. We did this example in our class participation. So let's do it together to compare the answer. So let me read the question. So Tony is a farmer, wheat farmer, but he also spends part of his life, his days, teaching guitar lessons. Due to the popularity of his local country western band, farmer Tony has more students requesting lessons that he has time if he is also to maintain his farming business. So farmer Tony charges $25 an hour for his guitar lessons. One spring, one spring day, he spends 10 hours in fields planting $130 worth of seeds. He expects that the seeds he planted will yield $300 of wheat. So his future income is going to be 300. His cost is, because he planted seed, 130, and his guitar lesson is 250 at 25 an hour, right? So scenario one, what is the total opportunity cost of the day that farmer Tony incurred for his spring day in the field planting wheat? Total opportunity cost, both implicit and explicit. So he spent 130 on on planting the seed. So he spent it, that is his explicit cost, right? So what if he didn't go for planting the seeds, rather he spends that 10 hours giving guitar lessons, he would be earning $250. So he chose 130 planting weeds. He lost the income. So his total opportunity cost is going to be 250 plus 130. D. Right, guys? Mirko?
Okay, because we got just a little bit confused between implicit cost and total opportunity cost.
Implicit cost, or the other name is opportunity cost. It is just a part which is
Okay.
250. Total opportunity cost is sum of both implicit plus explicit. Right? Scenario 2. Tony accountant would most likely figure the total cost of his wheat planting equals, because accountant, they don't consider implicit cost. So cost of planting the wheat, just the cost of seeds. Right? B. Tony accountant profit would be, accounting profit would be 300 minus 130. Answer would be 170. Right, Piranan?
Yes.
PD, are we on the same page? Understand? Okay, the last one is, what is the economic profit of Tony for farmer Tony? We know that its cost is 380. crop sales would yield 300. Answer would be B, minus 80. So you see, economic profit is always less than accounting profit. We confirmed here, right? Okay, let's take a break, and after 10 minutes, we will start again. Okay? Okay, guys, welcome back after a short break. So we just completed the cost concept regarding the economics. We talked about the difference between accounting profit and economic profit, and then we did some practical examples. Okay, now let's talk about the cost of production. So, like we told you that we will be following your book example, Helen Cookie Factory. So the assumption to start understanding this concept, we assume that we are following the Helen Cookie Factory. The one thing that we assume that if we want to increase the production, so we cannot increase the size of the factory. It means size of the factory is fixed. So production cannot be increased or decreased with respect to size of the factory. Size of the factory. We assume that factory size is fixed. So only option left to increase the production is by employing more number of workers. Right? So if Helen wants to increase the cookie production, so at the moment she cannot expand, she cannot, widen the factory at once. Okay, today she need to produce more, she widen the factory. Tomorrow she need to produce less, she shrinken the factory. It's not a logical option, right? So we assume that factory is fixed. And then if she want to vary the production, the only thing is that she increase or decrease the number of employed workers. That's it. Okay, now let's talk about the production function. A production function which shows the relationship between inputs and output. Inputs that are used to make goods, outputs that are the final goods. Right? Here we go. So you see the inputs, number of workers, all other things we say that fixed, factory size is fixed. So inputs are, we took one, or there are other inputs as well, but we took one which is worker and we compare it with our output. So what did you notice here? So this table, let me clear the mess here. It shows two columns and two columns. One column is it belongs to input, other belongs to output. Right? So what you see here, if no worker, no